Good evening. Welcome to the Duncan house. We're going to be talking tonight about maximizing your buying power in a credit-driven world. I have three attendees in attendance with us here. My wife Janelle, my daughter Emily, and my son Andrew is on the camera. And so we're going to go ahead and kick off with a question to all of the participants. And that question is, do you know what your credit score is? So, Emily, do you know what your credit score is?
No.
You don't? Okay. Janelle, do you know what your credit score is?
Nope.
Andrew, how about you?
No.
Okay. Well, we're going to talk tonight about why it is important for you to know what your credit score is. Obviously, an 11-year-old probably isn't going to have too many problems with credit, but it is important maybe for your parents to know what your credit score is. Again, my name is Rob Duncan. I have 25 years experience in the credit world. I got my first credit card when I was 18, JCPenney's credit card. And that credit card helped me build a solid credit history. I've done several other, obviously, more credit cards. In addition to that, I have had a couple of home loans, mortgages, as well as owning a few cars and getting loans on those cars. I've got a lot of experience, and I hope to pass some of that experience on to you tonight. We're in our classroom here. Obviously, we've got the video screen. If anybody needs to use the restroom, it's right down the hall. If you have any questions, you might want to stop me and ask those questions at certain points. I might even give an opportunity and stop the presentation to have you ask those questions. So what we're going to try to do today is we're going to try to understand what makes your credit score. We're going to try to understand how to maximize that score, and then how to take advantage of offers that you might get by having good credit. So what is your credit report? Okay, your credit report is a file that some credit bureaus have that has your credit history as reported by lenders, people that you get loans from, people you borrow money from. On your credit report, it'll have listed the types of credit that you have. It'll have listed the length of time that your accounts are open. It'll also have your payment history on there. So if you've been late on payments, or if you've had perfect payment history, that'll be included on your credit report, as well as personal information. They may have information if you've applied for credit about your job that's posted on your credit report, as well as your phone number, possibly an email address, any sort of public records. Those would also be on your credit report. So there's a lot of information on that credit report. There are three main bureaus that keep the majority of credit reports, and those are Experian, Equifax, and TransUnion. And those three credit bureaus do, they compile all of that data on your payment history and the information that's reported to them by lenders, and then people access that to determine whether or not you're a good credit risk. And so those three main bureaus cover all of the United States. In addition to that, there are several smaller or regional credit bureaus, such as Advanced Resolution Services or ID Analytics. And those typically they'll deal with smaller banks. Maybe a local mom and pop store would use one of those instead of one of the big credit bureaus. Okay, how are your credit scores used? The information in your credit report, your payment history, what types of accounts you have, all of that stuff is used to generate a credit score for you. Okay, and those credit scores are going to be used to influence lenders. They basically provide a summary of what your credit risk is. It helps them make a decision on whether or not they even want to give you a loan or provide you with a credit card or whatever it is. In addition, that credit score is used to determine what your interest rate might be. So You've seen all kinds of offers for credit cards that they talk about as low as 7.99%. Well, depending on how your credit score is, you have to have one of the best credit scores to get that APR. If you have a maybe not quite as good but still decent credit score, your interest rate might be 12.99 or 15.99 or as high as 27.99 I've seen. So definitely your credit score is important to determine that. Now, what makes up the credit score? And that's a very important piece. The majority of it is made up in two areas, which are very important. One is your payment history. We talked about that already. Ensure that you make all your payments on time, because your payment history is a large portion of that. 35%, in fact, of your FICO score is made with your payment history. The next large chunk of that, at 30%, is the amount of money that is owed, or your utilization of credit. So if you have $10,000 in available credit and you have $2,000 used, you are utilizing 20%, and that's probably an acceptable number, for most places. But if you're utilizing $9,000 out of that $10,000, you become more of a risk because you're taking out a larger loan, essentially. In addition to that, the length of your credit history. How long have you had accounts? I told you I've had an account since 1989, and that account really helps with the age of how many cards I have, and it will add into that 15% for the length of credit history. Every time I open a new account, the average age of my accounts goes a little bit lower until that new account gets longer. 10% of it is your new credit. So if you get new credit, that's added in there, and you want to do that periodically. You don't want to just get accounts and never get new credit again. On the other side of that, you don't want to have too much new credit either. You want to pay attention to how you're doing that. And then the last 10% is the type of credit used. So everybody's familiar with credit cards, and most people do have those. In addition to that, if you have a car loan or your student loan, say for instance, those are what's called installment loans, and you make a regular payment for a certain amount of time until those are paid off. So you have revolving credit, which is a credit card, which can fluctuate. You have an installment loan, which is a set amount, and then you also could have a mortgage. So those are different types of credit that you might use, and 10% of your score is whether or not you're using all of those. So a little portion, but it is important to have a good mix of that credit. Managing your credit report. So according to consumerreports.org, 1 in 5 credit reports have errors. They're missing or extra accounts. So let's say, for instance, you are a junior and your father has the same name. There are times when your father's accounts might end up on your credit report, and that's an error that needs to be fixed. Unless, of course, your father has really good credit, and then that might help you out, actually. There could be incorrect reporting. Your lender could have said you were late on a payment when you weren't really late on a payment. And so those sort of things need to be checked regularly to make sure that there aren't any of those late payments or credit limits. Does anybody have any questions so far?
How often should I check my credit report?
Well, it varies. Some people check it every day. Online, you can get a system that will allow you to go to a website and check your credit on a daily basis, monthly basis. The government actually recommends, through their annualcreditreport.com, checking that at least once a year. At minimum, I would say once a year, but anytime you're thinking about a big purchase, you might want to think ahead, like if you're going to, say for instance, refinance your house, you might want to think ahead to go check your credit report to make sure that that credit report is clean and doesn't have any errors on How do you fix those errors? If you find an error, what do? Well, the first step is probably to contact the creditor. Ask that creditor, hey, I looked at my credit report, I saw that you had a late payment reported, I don't believe that's accurate, and ask them to fix that. If they say, well, we don't believe it was late, you can escalate that within their customer service group and try to have somebody take a look at it. You know when you sent your payment and when it was due. So contacting the creditor is always the first step. In addition, you could contact the credit bureau that has that information, who may be reporting it incorrectly, and ask them to investigate that. And what they're supposed to do is they're supposed to reach out to that creditor to validate that information. And so they'll reach out, they have 30 days by law to do that, and they'll reach out to determine whether or not there is an actual error. And in some cases, extreme case I would say, you may need to hire a lawyer to have them assist you in getting those errors fixed. If they're, say for instance, somebody who has a similar name has a judgment and it's not yours, you might have to hire a lawyer that goes to the court to get that removed off of your credit report. So, sort of to recap as far as maximizing your credit score, some of the most important things you can do is pay on time and keep your balance low. Keep that utilization low because those two things are 65% total. So practically 2/3 of your credit score is made up of paying your bills on time and keeping your balances low enough so that it doesn't look like you're overextended. In addition, building lengthy credit relationships, finding a bank that you trust and doing business with them, getting loans from them, getting a credit card through them, that's an important piece. Be selective with new credit. Make sure that you're not just applying for everything, because every time you apply there's an inquiry on your report, and that makes a difference in reviewing your score. And then make sure you have a good mix of credit. Obviously, not everybody's going to have a mortgage. Some people live in an area where they live in an apartment. Maybe if you're younger, you're not going to have that. But most of us would have a car loan or a student loan, and then maybe a few credit cards as well. So go ahead and make sure that you have a good mix of credit if you can. Any additional questions at this point?
How old do you have to be to get a credit card?
To get a credit card in the United States, you need to be 18 years old. Sometimes it's hard to get a credit card when you're 18 years old because you don't have a lot of experience, or maybe there's nothing in your credit report. And so sometimes you have to get kind of a starter credit card where maybe you put a deposit down on that card, and then they basically take money from that deposit, and then eventually they give you the full amount of the loan. So very good question, very good question. So how can you take advantage of a high credit score? You've done all this work to make sure that your credit score is very good. You've paid all your bills on time. You got a good mix of credit. You've had long history of good payments. So how do you take advantage of that? Well, one way is by getting the best interest rate on loans. So if you went to get a mortgage, even just a couple of percentage points, 1 or 2 percentage points in interest, can save you tens of thousands of dollars. Usually a mortgage is for 30 years. Sometimes they do 15 or 20, but over the course of that mortgage, you are going to save a lot of money by having a better interest rate, by having that high credit score, not having any problems. You're a lot easier to trust for those lending institutions, so they're going to make sure that you get the best rates. It doesn't cost you as much money to borrow money from them. So that's one way. Your vehicle is another way. When you buy a car, the last car I bought was a Honda. I got 0.9% financing, and on that, that's $800 that I paid in interest over the life of the loan for 5 years of that car, and that's a pretty cheap rate to borrow that much money. It's an $18,000 car. So, making sure that you get that best interest rate is very important. In addition, many credit cards offer 0% offers from time to time. Whether that's at Best Buy or Home Depot or one of those places, if you buy a new TV, then at Best Buy, you might not have to pay any interest for 18 months, which gives you 18 months to pay on that TV without having to pay any sort of interest penalties. Now you have to be careful with that, because if you go too long and you don't pay all that money back within that 18 months, a lot of times they'll hit you with a lump sum of the interest you would have paid. So it's very important to pay attention to that and make sure that you have a plan to pay that off in a timely manner so you don't get hit with those high interest rates. Okay, in addition to that, another way to take advantage of a high credit score is by utilizing points or miles on different credit cards. There are all kinds of bonus offers for people to sign up for a Southwest credit card, say for instance, which is the picture I have on the screen there, and maybe get 50,000 miles on that Southwest card, which is the equivalent to 2 round-trip tickets on Southwest. That's a pretty good deal for just signing up for their credit card. The Sapphire Preferred, also a Chase card there, has an offer a lot of times for 40,000 points, which is equal to $400 in cash. So just for using their credit card, they're going to pay you for doing that. One way to take advantage of that is to use a credit card to rack up those points instead of using a debit card. Debit cards are somewhat dangerous if you use them. You've seen a lot of things on the news about Target, about Home Depot being hacked and your information from that card. Well, if your checking account gets drained, it takes a lot of effort to get that back. With credit cards, typically you're only liable for the first $50 on that. So there's a little bit of a safety net by utilizing that credit card. Again, you want to make sure that if you're doing that, that you are paying attention to when your payments are due. Typically what I would recommend is use your regular day-to-day spending with that credit card, and then at the end of the month, when you would normally have maybe nothing left in your bank account, you move that money over and you pay that credit card off, and then you don't have any interest rate. So again, you're saving money, you're getting points that can be used for flights, can be used for gift cards, can be used for several other things. All right, so as you can see, it's very important for you to maximize your credit score. One of the things you want to make sure you do in review is make sure that you review your credit report, make sure you take care of any problems you might have, correcting any errors, and then use that high credit score to your advantage to make money through those offers or 0% loans or anything like that. Any other questions? Yes, Andrew, you have a question.
Should my parents check my credit report?
Very good question. Should your parents check your credit report? Well, I think it's important in today's day and age to do that, yes. Because at some point in your life, when you're older than 18, you may want to get a credit report, and you might find out that with identity theft problems, somebody has stolen your identity and gotten a credit card in your name. We've seen it all the time on the news. Sometimes it's the parents too. So I didn't do it, so you should be okay. But it is important for you to check your credit report on a regular basis, and if you're underage, it's not a bad idea for your parents to check it at least a few times during your teenage years, so that they can determine if there has been an identity theft issue. Any other questions? All right, no. Thank you very much for your time.